Want to shop Walmart Black Friday deals first? Walmart Plus members get early access to our hottest deals. Join now and get 50% off a 1-year annual membership. Shop Black Friday deals first with Walmart Plus. See terms at walmartplus.com.
Okay, I have to tell you, I was just looking on eBay where I go for all kinds of things I love, and there it was.
That hologram trading card. One of the rarest, the last one I needed for my set. Shiny like the
designer handbag of my dreams. One of a kind. eBay had it, and now everyone's asking, ooh, where'd you get your
windshield wipers? eBay has all the parts that fit my car. No more annoying, just beautiful.
Whatever you love, find it on eBay. eBay, things people love.
Welcome back to the Trading Coach Podcast, gang. As always, I'm your host, Akil. In today's episode, we're going to talk about when I use technicals and when I use fundamentals to invest/trade in different markets. We're also going to talk about something brand new that I plan on introducing into my trading and investing that kind of is like a hybrid. It falls in the middle. I'm not quite sure how to classify it, but I know that it's going to be helpful. All right, let's hop in. Do you trade stocks using price action? Is it possible to backtest strategies on stocks? Or do you use it for entries on stock investments or neither? So we'll start with the backtesting part. Yes, you can backtest strategies on stocks. Rule of thumb would be this for backtesting, right? Assuming you're using technical analysis. If there is a chart with historical data, right? And if it's a chart with no data on it, it wouldn't make any difference. But if there is a chart with historical data, then you can backtest it. So the process would be no different than what you would do in any other type of market. You go back through historical data, you scroll through, assuming you're doing it manually, and you look for opportunities that meet the rules of your trading plan, and you track the data accordingly. So it would be the same exact process. And yes, it is possible. Now, for me personally, I do not trade stocks. I invest in stocks. I do use price action. So I always say it like this: it's the complete opposite shift of what I do in the Forex market. So in the Forex market, technicals are primary, fundamentals are secondary, meaning that every decision that I make on the chart in an active trade for Forex is a technical decision, right? It doesn't matter what I think about the currency. Doesn't matter what I feel about the currency. If there is a technical setup that meets my rules of engagement, I must take it. With that being said, right, fundamentals can be used as a secondary source. So, for example, let's say I want to be long the dollar right now because of the election and the red sweep and everything that's happening that is positive or supposed to be positive for the dollar. I can't just go on a chart and have that confirmation bias saying that, hey, I'm looking at euro dollar and I only want to sell. The sell has to be for technical reasons. With that being said, let's say that I find a delicious trend continuation opportunity on the euro dollar to the short side, which would mean buying the dollar, right? Selling the euro. If I have a bearish trend continuation opportunity on the euro dollar, and I also have that fundamental backing of, hey, I think we're going to be strong bearish because of X, Y, and Z, that allows me to shoot for a little bit more. That's what I call the home run trades, where I still go for a conservative target, right? Because I want to get my money and I want to get my stops to break even and pad my account. But if there is a bigger opportunity that I see available, I will also shoot for that bigger opportunity because of that fundamental background. In the stock market, it's the exact opposite. So, right, flip everything around. A little ice zone kind of structure swap type deal. Support turns into resistance. In the stock market, when it comes to investing, I guess not just the stock market, but when it comes to investing, whatever market that I would be in, fundamentals play the role first and foremost, right? Because it's not just a mercenary type of get in, get out type of deal, right? That's what trading is for me, right? Trading is I am a mercenary. I have no allegiance to kind of any direction in the market. I have no allegiance to any pair. I am strictly about my money. So I don't care if something goes up. I don't care if something goes down. I'm going to get in the direction that I feel is correct. I can be long euro dollar today. I can be short euro dollar tomorrow. I can be long euro dollar and short the pound dollar at the same time, which some think is weird because it's like, hey, Akil, you're selling the dollar on one pair and buying it on another pair. Doesn't that contradict each other? Like, no, right? The chart said to do this on one and do that on the other, so I'm doing it, right? Whatever the opportunity is, I want to get involved. But with the understanding that when we speak about trading is kind of it's a short-term deal, right? I don't consider it trading if you are in a trade for like 2 years, right? I don't think any trader is looking that far down the road, right? Once you get past a certain time period, it becomes more of an investment, and an investment is based off different factors, right? So when it comes to investing, the fundamental backing has to be there first. I have to believe and value in whatever I am investing in, right? If I'm looking at Tesla, because I had the Tesla chart up earlier, I need to believe that, hey, I think Tesla is a buy because of X, Y, and Z. I think this is a buy for the foreseeable future, and I'm looking for an investment reason to get involved because I value that company or value the people behind the company, whatever your kind of philosophy is. The difference so it's fundamental based first as far as deciding, do I want to be long, do I want to be short, do I want to be out? After I have that bias made up, I want to be long, I want to be short, then I go to the technicals to look for the key levels, right? So I know that I want to be long. Now the question is, right, where do I want to be long at? And that's when I go over to the technicals and look for the key levels where it's like, hey, price action has just been on a 3-month rally, we're at highs, whatever like that. I don't want to be long here, but if we get a little bit of relief, here's a price area, right, a previous level of structure support that we may come to that I think is a cheap enough price to buy. Or here is a pattern that's being formed, and I know that when this pattern is being formed, we should expect the breakout. So I want to start putting in my position now prior to this wedge pattern breaking out or this flag pattern breaking out. Or, oh, we're at a head and shoulders right now and we just broke the neckline. I don't want to be long right now. Let's wait till this head and shoulders plays out because I know this is a classic reversal pattern. I'll get in afterwards, or if it's in the opposite direction, I'll get in once this neckline breaks, something like that, because that gives me confirmation of that bullish bias that I had. So the fundamentals come first. That creates the bias. That would be like the I and the P on the chart, right? You know how we talk about IPDE, identify, predict, decide, execute, where we identify what the market is doing. We get a lay of the land. We predict what we think the market is likely to do next based on those technicals, and then we go down to our lower time frames. We look for specific reasons for entry. Think of the I and the P in investing being from the fundamental side. I'm identifying and predicting based on my fundamental bias, and then once I have that bias, right, that's me putting it to the side. I don't know what that noise was, but it's just imagine it, right? Once I have that bias, now I'm still going to my technicals to decide, okay, how and when I'm going to get involved. And the same thing goes for like stops and targets, mental stops and kind of target areas for when I want to get out. So that is the difference. I would say this, I haven't played around with it yet. Still, it's on my winner list too. But when we talk about the fundamental side and kind of I don't know where this lies, but you see the stuff that Jason does with Forecaster. And looking at different trends and stuff like that. I don't know whether that lies under technicals or fundamentals, because it's technicals, but not necessarily chart technicals. It's market trend technicals and cycles and stuff like that. However you want to classify it, again, it doesn't matter how you classify it, but that would fall into kind of the mix area as well, where maybe you identify a certain time of the year where, hey, this stock historically dips before it rallies to start the new year, and boom, maybe that works into your technical analysis of, hey, like, I'm interested in this from a fundamental perspective, but I know I need to wait until December because we historically have a blank percent relief in September before rallying again in January. So maybe that goes into that decision making, kind of blending, I guess, a hybrid, the decision making on the fundamental side of whether you want to buy it, but then also in the decision making of how you want to buy it. Again, I haven't had a chance to play around with Forecaster yet, but it is on my to-do list over winter. And from what I've seen and from my conversations with Jason and all he's shown me with it, it's a very, very, very valuable tool in kind of bridging that gap as well from either a trading or an investment standpoint. So looking forward to adding that to the arsenal as well. So good question, Paul. Good question. Hope you enjoyed the episode. Please show your support if you haven't done so already. It only takes a minute out of your life, but it is very, 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 very helpful to what we're doing here and what we're trying to grow with the Trading Coach podcast. Leave a rating, leave a review, just click 5 stars or however much you think I deserve. And if you want to leave a few words, that is helpful as well. I appreciate all the support you have given. I appreciate the support in the future. And until next time, plan to trade your plan. Take care.